What is going on, investors? Back again. Time to talk about NIO Limited, better known as NIO, popular electric vehicle maker in China. Just reported their earnings after the bell. Just stocks up about 1,000% over the last year. This one's been soaring. I think we've been covering this one since it's in the 20s. We got a $71 billion market cap on this one. So they just reported their earnings and they were quite good. On the EPS side, a figure I don't really pay attention to. They did beat on there. They did miss on revenue. I think more importantly here, they show for their first quarter 2021 outlook, so the upcoming quarter, they're showing between 20,000 and 20,500 vehicle deliveries. So first thing I wanted to show you was their vehicle deliveries over the last few quarters. We go back to 2019 Q1. They were delivering about 4,000 vehicles. And you see here, it's basically steadily declined. You've had some declines here in Q1 and you boom, all the way up to the most recent quarter. They delivered 17,353 vehicles. So the fact that they're going to do about 20,000 vehicles is a lot. And you notice that in Q1 2020, they only delivered 3,800. That was down tremendously. I thought maybe that was Chinese New Year related. Not exactly. It could have been coronavirus related as well. But all in all, going to show a fantastic quarter or year over year basis on growth, but also kind of quarter over quarter. You see here, we grew about 2,000 vehicles, grew about 5,000 here. We're going to grow another, call it about 3,000 in the upcoming quarter. Now, from a revenue perspective, they're supposed to do about 7.3 billion RMB, which is the Chinese currency. And we see here in the most recent quarter, they did about 6 billion. So they're bolting on another billion, which is probably, a couple $100 million. You see here 6 billion won, and this is the RMB currency, is about $1 billion in United States dollars, which is what this figure is. So they crossed that $1 billion mark over at NIO. Let's jump into the numbers. And then what we're going to do is jump over to the stock chart as well. See where this one's trading at. See if there's some levels here. This thing's kind of been in a shorter term downtrend. Maybe it's a buying opportunity as we pull back. So what we talked about here is we've got our revenue here on the top line, vehicle sales, and they've got some other sales as well. And you've got a year over year view here, and then quarter over quarter on a monthly basis here, on a 3-month basis here. And then you've got it written here in United States dollar. What I'm going to do is focus on this column here, since most of you are probably watching this in the United States. We crossed the $1 billion in total revenue. We have our total cost of sales here at 842. So they spent 842 to make $1 billion. That leaves us about $175 million here on the 3 months ended. So you can start annualizing a number like that out and get to, $71 billion valuation. It's not cheaply valued, but when you look at a Tesla and things like that, it probably makes a little bit more sense from that issue. Now, moving on to other expenses here. We've got research and development, selling, general, administrative, and we got some other operating expenses here. Those come in at $317 million. We see here we made 175 operating, and we lost about 142 when you factor in all the other expenses. So this is a company that's losing money. You see here on a quarter over quarter basis here, we lost 945. This is in the Chinese currency. That basically stayed flat. Okay, so even though we saw this bump up in deliveries and we saw a rather significant bump up in our vehicle sales, we were not being able to turn that into a better operating margin, at least from the bottom line or almost bottom line perspective on this one. Now, the other thing I wanted to show you here is they do show you vehicle margin here, and it's kind of interesting. So we've got our gross margin on the vehicles coming in the most recent quarter at about 17%. Okay, that actually is beating the previous quarter as well as at 12%. And last year they were basically giving these cars away below cost. They were learning a negative 8.9% margin. Now, what we know about Tesla is they operate in this range, in this 19, 20, 21, 22% margin. So it'll be interesting to see how much more NIO can squeeze out of this. Okay, we've gone from 12.9 up to 17. What I'm wondering is, as we get into next quarter and maybe even to next year, Can they squeeze more margin out of that, or does the competition for the EV vehicle and just, manufacturing in general just take its toll on those margins? So obviously with those small margins and the fact that they're not growing, they're not able to turn a profit on where they're at, obviously they're going to have to keep delivering more vehicles. And I actually think most people are anticipating that. Now, NIO coming in at about $50 per share right now. That's about where the stock was trading at earlier today as well. We're basically flat in the after hours. I think the earnings came in about as expected. We're kind of locked in this downtrend, although we peaked up above it. There is a little bit of resistance here at the $49 per share range. We see here it acted as a little bit of resistance here, and once we broke it, it was kind of off to the races on this one. And so some intermediate spots. If you want to step in here and buy NIO, it's not that bad. 44 to 49. If you want to add to your shares, I don't hate this level. I think you could get better. You could get down here at 38, 39, 40. Somewhere in this bottom end of the range would be somewhat interesting for NIO, but not necessarily a requirement. We break above this, so we'll call it $48, $49 on some strong momentum. And yes, 55, 56 is probably back in play on this one. But notice up here at about $56 per share, some heavy support level here. Once this $55, $56 level was broken, it was off to the downside all the way down to, below about $44, $42 per share. So I would expect as this one walked its way back up to 56, sellers would step in here. So you can play this a number of different ways. There's probably some options plays you can play with this one. There's definitely some trading opportunities on this one as well. You could play the pop from 47 up to 46, set a stop loss at 44. That type of thing could be in play. The other thing is if you're just looking naturally to go long this one, I think you nibble in this range. You take a larger bite down in this range, 38 to 44. Any break of that, and yeah, you're coming down here probably in $28, $29 per share. So there could potentially be some downside in this one. On the way up, you're looking for resistance at 56, any break of 55, 56, and you're probably retesting these all-time highs back in the 60s. So I like this stock. I think it's completely overvalued from kind of a traditional valuation, perspective. So you have to kind of weigh that with NIO, that it's probably overvalued from a price to earnings, price to sales, from a market cap perspective. But if you believe in kind of the long-term growth strategy on this one and the fact that they're going to deliver more cars, it could be a viable investment for you. So hopefully you guys enjoyed this video. Be back with more soon. Good luck with your investments.